guard your grill, cause my lyrics hit like steel. Believe me when I tell you everything is everything.
Hey, what's up? This is your boy Calvin Bennett. I'm here with my friend
Corinne Gibbs.
and we're here to give you some tax tips from KB Taxes. But before we get into some tax tips, I need to pass on some important information to you. We got an all points bulletin going on in our community where we have two of our residents that's missing, Jason Salter and Kenny Guerrero. Please, if you see these two guys, man, alert your local authority. They've been missing since Saturday. I've been seeing it all over Facebook. A couple of my friends, Tori, Duran, and some other people have been posting it. They had they were search party out yesterday. And from what I hear, there's an update, so listen to your local news and try to stay involved.
And get these people found. They need to come home.
Yes. Okay, so now the first thing we want to do tonight is talk about small businesses. We have a number of clients that have small businesses who we prepare taxes for, and there's always a problem. We all learn something new about preparing taxes. So where do we want to start?
Well, with small businesses, it's it gets intricate, unfortunately, for the taxpayer because of the way taxes need to be done. People are unaware sometimes that they need to file a small business return, or they're unaware how to file a small business return. Sometimes people are unaware that they even have a small business. And so today we want to cover, number one, small businesses and how they're set up, which type of business you want, like which type of entity you would need for the services or goods that you're going to be selling or giving out. And Calvin will talk more about business setups.
Okay, so one of the first things you want to ask yourself about a business is, what type of relationship do I want with IRS? How do I want my taxes or my income to be treated from an IRS perspective? So you got sole proprietor, you have partnerships, you have LLCs, you have Corp Cs, and you have Corp S's. Your choice. A sole proprietor, obviously you don't need an EIN number, which is an employee identification number. You can run a sole proprietor under your social security number. This is how a number of our clients are set up.
Correct.
They're just like guys that do landscaping, painting on the
janitorial
side.
services,
Right.
hairstylists, child care providers, things of that nature.
Right.
For example.
Their taxes, are just a part of their personal taxes, and they're put on what's called a Schedule C, which some of you probably would know as a profit and loss statement, which is a reflection of your business from a profit and loss point of view. The second thing you may want to do, you may want to consider, is whether you want to set up a partnership. A partnership is probably the worst relationship that you want to go into in business. There's no escaping write-offs. Everything is split down the middle. What you lose, what you make goes right onto your personal tax return. There's no write-off. You pay the taxes on what you earn, or you could take a write-off on what you lost. The third option is an LLC. This is the most intricate entity that you could set up.
It's also the most common one that a lot of people are using.
Yes, it's the most common because it's what most people are taught to use. It's probably not the most advantageous to you from a tax point of view. The difference with the thing about an LLC is that the income or the liabilities all run down to your tax return.
Your personal taxes?
Your personal tax return. It's a part of your personal tax return. So all of the losses that you write off, they're on your personal tax returns, and that's why a lot of you guys get audited. Because IRS just can plainly see, common sense would tell IRS that if there's someone that's have a full-time job making $30,000 or $40,000 a year and then paying the taxes, they owe $3,000 or $4,000 in taxes, and then they want to say they have a business and say they lost $30,000 or $40,000. This is put on your tax return. IRS sees you doing massive write-offs, raises a red flag. You may be called for a review or an audit. I would suggest that if you do an LLC, You do a LLC on the state level, register as LLC with your state. But when you go to IRS and you try to form, get your EIN number, what you want to do is request to be treated as a Corp S. If you're a single member LLC, which most LLCs are single members, somebody just put a business together and registered as an LLC, you can fill out a form P2555. That's form P2555. This form is a request of IRS that you're asking IRS to treat you, a single member LLC, as a Corp S for tax purposes. What does that do for you? It does a couple of things for you. Number one, you could write off insurance. You could write off disability insurance. You could write off payroll insurance or your payroll. You could, and the good thing about this, a Corp S has its own form that you complete. So you don't have to worry about your losses or your income coming down to your 1040.
Oh, so you're not combining that with your personal return like the LLC.
No, you're not combining it, but you are going to report money that you either lost or money that you earned.
Gotcha.
In the form of a K1, which you will receive from your Corp S, or a K1 or a W2, if you want to put yourself on payroll.
That's also a good thing with the S Corp compared to the LLC, correct?
It's a great thing.
Gotcha.
So that's one of the advantages. The other thing is, you really, the most advantageous thing about having a Corp S is that none of the liabilities follow you down to your personal income tax return. Everything is rolled off on the corporate level.
Oh, so with that business setup, you would do this like how? How would I know that I need to set this up? Like, how do I know that I'm just not the average child care provider, or I'm not just the average? How do I know I need to go in there? Like, what would prompt me to set up a business entity like an LLC or an S Corp outside of just using my regular social to report income that I made?
Good advice. It's always good advice. If you're going to set up a business, set up a Corp S. It's just good advice. There are situations where a LLC comes in handy. I'll give you one. I have a real estate investment firm, and we purchase homes and we sell homes. So we have temporary ownership of different properties. We will purchase the property under the LLC, and we'll sell it under the LLC. The Corp S would own the LLC that we create to purchase the property. Why do we do that? Well, because you may have more than one property, you may have more than one business, and if you separate them, through LLCs, you're protecting them. Each business stands on its own, and that's one of the most advantageous things about owning that LLC, for temporary projects or for holding. You see people who buy property a lot, they may form an LLC to hold land, and that type of thing. But that's the advantage of, that's one of the advantages of having an LLC,
Okay.
temporary.
Okay. So, let's say I receive a 1099K or a 1099 miscellaneous form with other income on it. And now, how would I apply that to my business taxes or to my business? How does that work? Like, for example, the better way to ask this is the forms. What forms as a business would I receive, and how, would I report that?
Well, with a Corp S, you could get if you have shareholders, that's what the S is for shareholders, because you can sell shares if you like. But remember, this is a single member
Correct.
LLC that acts to be treated as a Corp S for IRS tax purposes. So, you would get a K1, just showing the income that you received, and that K1 is put onto your 1040. And now the K1 income, we used to have a spot where we could put it, where we actually had a K1 form, but now you take that K1 and you put it under 1099 miscellaneous, as they're doing with ride share and those type of jobs, gig jobs as they call it. Or you could, I wouldn't say you could put it under 1099. I think miscellaneous is the best spot to put that because it's not reported like it used to be, K1.
Now, when you say report, this means that people or other entities are reporting that this business has made money. So that means that this business's EIN, employer identification number, is being reported as receiving money for services.
Yeah. You have to understand when you're a contractor person, let's say a contractor for instance, someone that, like my nephew that, he does jobs sometimes for other HVAC companies, and they hire him as a contractor. At the end of the year, you get a 1099. A 1099 for a business, a 1099 NEC, non-employee compensation. A 1099 for a business is like gold, because what you're trying to do is get all that extra income off of your books so you don't have to pay taxes. So when you pay someone to do a job, i.e. I give you $10,000, at the end of the year, I give you a 1099. That's putting you on notice that number one, you made $10,000 from our company.
Okay.
Number two, that form 1099 tells you that that money is being reported to IRS as earned income by your company or your social security number, depending on how you're doing business with the company you're contracted with.
Got you. And so it's funny that we got right there is because that is what a lot of our taxpayers are running into, and I mean taxpayers that don't necessarily have a business, or they just work at a regular place that at one point in time they gave them W-2s, and then laws change, whatever the case may be. Now the company issues 1099 NECs to their employees, well, not employees, excuse me, contractors, and they label them as non-employee compensate. Exactly. So with that being said, the non-employee compensation can be moved to the form Schedule C, like you said, as a business, or it can be listed as other income if you do not have a business, listed like an LLC or EIN. You're not working under your business name. Business tax ID.
And one of the things I failed to mention also, this is the most advantageous thing about becoming a Corp S as opposed to LLC. LLC or in sole proprietor, we get taxed twice. As a Corp S, you're only going to get taxed once as a corporation. And you get that K1 and it pulls down to your personal income tax. And that's where you would get taxed once. But as an LLC, you pay double taxes. Like employers pay Social Security and payroll taxes, and the employee pays into their Social Security, and they pay taxes. But when you're self-employed, you pay both those things twice.
Self-employment taxes.
When you're self-employed under LLC, so you gotta understand. One of the things that I find, this is probably the most frustrating thing about our clients, some of our clients, is not understanding the importance of paying taxes as you earn money. A lot of us, we want to make the money, but we don't want to be responsible to pay taxes, to do the right thing. And like I think we talked about this in one of our previous episodes. We want to suppress our income. And in suppressing your income, you do no one any good. You can't get a car, you can't buy a home. Your credit score is going to continue to be, deflated because your debt to income ratio is probably off the chart because you're not reporting any income. So there's so many advantages to having a Corp S versus a LLC. I set up two over the past couple of weeks. Because every time I talk to one of my small business owners about the way their company is set up, we always wind up submitting that form P555, a request to be treated as a Corp S, with IRS.
Yeah. Well, that's a good thing, and the business information you gave us regarding setting up is a good thing. For more information about setting up your business, LLC, S Corp, or corporation, you can contact KB Tax Insurance, and we'll be more than happy to assist you. We can set up for any state in the United States, so don't worry, we'll take care of you if you're not in Georgia. With that being said, Calvin, I wanted to move towards doing your taxes. Now, I know we covered a little bit about taxes regarding the setup of a business. However, the purpose of us even talking about the setup of a business is because we encounter a lot of clients who come in with businesses that they want to put on their returns, and they do not have what is needed, or we run into issues where they didn't pay taxes, like Calvin said, they end up owing, for not paying throughout the year. And so with that being said, I wanted to go over some things, some tips to help you with your tax return preparation for small businesses.
Give me some tips.
All right. First things first.
Let's go.
You want to retain good records. It is nothing more frustrating as a tax preparer and even as a client than preparing your taxes without the information that you need. Okay? Not to mention the setup for failure. It's a setup for failure. Because what'll happen is you'll end up going without information that was needed, number one. Then you can get audited. Audit, review. That's number one. Number two, you can report too much, and now it's like Calvin said, I have no income. I've reported that I made this amount, but then I reported that I paid this amount, and now I have $2,000 in the AGA. IRS is wondering, how did you take care of your family with $2,000 and sustain a lifestyle, of your own with $2,000? There's just no way. And like you said, you go to purchase that house or car, and they're looking at your taxes, and they're like, how are you going to afford to pay us a monthly, lease amount, and you can't even, you don't have any money on your tax return. So that's another thing. And a good tip to keep with you, besides keeping good records, is making sure they're right. Making sure your information is right. Making sure you are issuing out forms for your contractors, like 1099 miscellaneouses and 1099 NECs. We have a lot of people who have people that work for them, and they just pay them Cash App or just pay them cash. They don't get a receipt, and now they have no proof, going back to keeping good records, of who they paid. If they issued a form 1099 NEC for non-employee compensation, then that would be reported to IRS, and then they would have adequate documents to put that they had contracted labor. Another good tip is to be sure that your documents are put together. So we like to inform our clients on what's going on in the tax world and how it affects them, and how it affects us as tax preparers too. Because we have a due diligence that we have to, go through regarding making sure that we be sure you are who you are. You're bringing us, adequate documentation to substantiate the return that we submit to IRS and to the states. And so help us help you, because just like you guys can get audited, as tax preparers, we can get audited too.
Been there.
And not only do you guys pay fines, but we can pay fines and also be faced to penalties.
$5,000 per return. Yep, I said it, 5,000 per return.
So if you're lucky enough to do 100 returns, you do the math. That's 100 times
And
5,000.
we do a few hundred returns per year, and that's here nor there. That's something that we have to be responsible for and do our due diligence.
Correct. So
Yeah.
the only reason why I mentioned it like that, Calvin,
Right,
because
right.
a lot of our clients come in, or we have new clients that come in, and they're like, what do you mean you need my child birth certificate? This is my child. Or I claimed them last year. Or, well, here's the tax return. Well, the social and everything is on there, but yeah, you claimed them last year, but that was for the previous year. You're talking about 2022, for example. You claimed them for 2021. Things could have changed. That child may not have been in your care, or that business may not have. You might start a new business. Things change, and that's why each time you get your taxes done, as a preparer, we're required to request documentation to substantiate the return that you submit.
And so, to close this out, what I would like for you to do is get in touch with us. If you're not a client already, www.kbtaxes.com. That's www.kbtaxes.com. And we can sit with you, walk you through setting up your company, walk you through doing the W-4 form, walk you through filling out a W-9 form, whatever you need to empower your business and to start moving on, empowering you to create your business legally and the right way so you could benefit from it. You know, my job as your tax preparer is to help to nurture a healthy relationship between you and IRS in which you don't pay as much money as they would like you to pay. It's a game. They want the money, we want to keep the money. We just have to do it legally.
That's
and
it.
that's where we come in.
For more information, like Calvin said, visit our website at kbtaxes.com. Or you can give us a call, 678-489-4761.
Or come by.
Come by, 2225, that's 2225 Godby Road, Suite C, College Park, Georgia, 30349. Or you can email us at kbtaxes@gmail.com.
Hey, have a nice night. We'll see you on the
We'll
next
see you guys
episode.
next time.
Loving people who just wanna see me ascend. I'm just counting my blessings. I can't complain. No, I can't complain.